Sales at Walmart's U.S. stores came up short over the holiday season. Holiday sales at the world's largest retailer fell more than analysts projected. Joining us now is Craig Johnson, president of Customer Growth Partners. He advises Fortune 500 companies on how to improve sales. That's the one thing that stands out for me in Walmart's earnings report, Craig. Same-store sales here in the United States down 1.1%, excluding fuel. We have to take that away. More than analysts were anticipating. Sales coming in short of expectations as well, depending on how you stack it up, by at least $1.5 billion. What does that tell you about the company right now?
Well, this is a company that is a classic tale of three cities. Walmart International going great guns, Sam's Club on a great rebound, Walmart U.S. flailing. Unfortunately it's lost its way the last couple of years, and it's struggling, frankly, and it needs to find the formula, and it's facing a couple major problems. It has an innovation gap versus its most important competitors, and it has a convenience gap, and it's not really addressing either.
Who's kicking Walmart's butt right now?
Well, they have two different markets they play into. At the lower end, the classic low to moderate income, they're losing share of customer and share of trip to the dollar stores, to the Aldis of the world, and even to the drug majors, CVS and Walgreens. At the upper half of the market, they're losing to Target, Kohl's, and a revived Macy's.
Well, okay, Target, a dramatic story there in the sense that Target was given up for dead by some people a couple of years ago, and Walmart was going great guns through the recession. How did they screw it up?
Well, the difference is this innovation gap. Three years ago, Walmart was going great in terms of innovation. They were introducing a lot of new concepts, and they were really moving forward. They've lost their way the last year or two. Meanwhile, all the innovation energy has been on Target. The 5% red card, the P-Fresh, the smaller stores, getting into the urban markets. They've always been innovation on the fashion side, but it's all these other areas, and Walmart has been lagging on innovation.
So tell me, Craig, Walmart announced today that it's scaling back capital expenditure plans for the current fiscal year by some $1 billion. Is that the right move, given the fact that maybe size isn't where they're trailing the competition?
That is one of the right moves. Their stores are sized for yesterday's wars as these big battleships, 200,000 square foot stores. Meanwhile, the retail wars these days are being fought in the era of guided missile frigates, smaller landing craft, etc., and their fleet is simply oversized versus the market. So they need to get much better store productivity. Their store productivity used to be almost $460 per square foot 5 years ago. Now it's below $430 per square foot. That's not a formula for success. In the U.S., I should emphasize.
Right. And there's a contrast, right, between what's going on here and what's going on outside the country. Is there anything that Walmart has learned about retailing internationally that's going well that it could bring back to the United States?
That's a great point. That's one of the things they should be doing. International has dozens of different formats, many of them smaller. Now, some of them are the larger hypermarkets. That's not what they need. They need much more application of the innovation energy that they're seeing internationally, whether it's Brazil, whether it's ours in the UK, Walmart de Mexico. They can bring a lot of the smaller format stores, particularly that they see in Central and South America, bring one or two of the small format stores here to the U.S., get them into the cities, and get them where people want to shop. People don't have the time or patience to navigate 200,000 square foot stores anymore. Those things are fine for yesterday's wars, and you need them sometimes, but not for your day-to-day shopping.
Craig, one last quick question before we go. When Walmart says, quote unquote, it's going to take some time for those same-store sales here in the United States to turn positive, how many quarters do you think we're talking about?
Well, I think it's going to take a little bit of time because, again, changing the fleet the way we're talking about, that cannot happen overnight, because you're talking about literally turning around the Queen Mary has a long turning radius, so it's going to take a little while, but there are clearly some things they can do right now. They've just announced one innovation thing, the NASCAR partnership, which is a great idea. It's right to their core strengths. That's the first new idea I've seen come out of Walmart U.S. in some time. That's a great idea.
Craig, thanks for joining us. Craig Johnson, president of Customer Growth Partners, turning around the Queen Mary. That's what lies ahead for Walmart.